Okay, everybody. Well, I am here with Cady, who's one of the lead educators for the Sang Lucci Master Course. Chris, say hello.
Hi, everybody, and to my old friends, welcome back. And good to see you, Charlie. Thanks for having me.
Good to see you too, man. I'm really excited for this conversation. So just to give a little context for this interview, for this series. So we call this series the Unbreakable Trader All-In series, right? So Unbreakable Trader comes from the context of last year broke a lot of traders. Last year, it felt like markets broke, and it really fucked up a lot of traders.
Isn't that interesting? Like even the title implies that in order to survive, you have to be flexible.
Right. Bend, not break. Right.
Yeah.
That's something I want to go in depth with you on today. And then all in is in part because this is our last Sang Lucci Master Course in the format that we're teaching it. So we're going to kind of going all in on this one. But also we've talked to a lot of traders and a lot of people in our community. And there was just a general sense that people were like, I'm going all in right now. Like I'm pulling out all the stops. There's things that I know that I need to do, that I need to change in my trading and my life, to get to where I need to go. And I'm not messing around anymore. I'm going all in. Right. And so that felt like some energy that we really wanted to, capture and go deeper into in this series. And no better person for me to talk to about this than Cady. Chris is an absolute, just a badass of a trader and a human being. We've been fortunate to have him be a part of our operation here in our community for like 5 years now, I would say.
A while.
Yeah. He's been trading. What was your first year trading, Chris?
I got my membership in April of 1980.
April of 1980. And he's been doing it.
Oh, no, sorry. April of 1981. Sorry.
Oh God, how could you add a year in?
Right, I forgot.
He's been doing it at the highest of levels, ever since then. He is a very, very humble guy. He is somebody who is capable of talking about things from a psychological perspective with language and insight that is very, very uncommon in the trading space. He has a very, very deep background in meditation practice, with many, more than a dozen month-long silent retreats under his belt. And he used to train new traders for Goldman Sachs for a 5-year stint. I mean, he's done it all. He's seen it all. And that's one of the reasons why we've got him here for this conversation. So, Chris.
Flexibility. Yeah, thanks, Charlie. That's very nice. And to everybody watching, a lot of the reason that I've survived was that I just aligned myself with good teachers. So I would offer the same advice to you. If you find a good teacher, just stick with them or try and get as much as you can from them. And in the old days, right, they were all over the exchange floor. They were right there. You could be like, hey, can I get you a cup of coffee? And, oh, here's my position. What do you think? Or see this chart. And so there was a natural mentoring process, maybe similar to the way the Eskimos or the Indians did it back in the day for, raising their tribe. So Charlie's essentially trying to capture that data, which is great. He's like archiving, the elder, wiser people. And hopefully we can lay down Charlie and I can lay down some tracks that will be helpful to everybody who's watching.
Absolutely.
Yeah. And so the understanding was that that this conversation was going to be about, all in, and that's a very extreme position, which I guess reflects that that everything is pretty extreme these days. And Pete Stottlemyre, the guy who created Market Profile, would always say stuff like, the guy who believes the most in the position and is right will make the most amount of money. So, and then of course there's the upside of, averaging down has killed more traders than anybody.
Right.
So
you just got to be right. That's kind of a key part to that equation. You got to be right.
And then there was always this thing on the floor where guys who had reached that all in place, and I only saw them because the winners, of course, you were there the next day. But there was an expression called the airport trade, where people would just put on a huge position and go to the airport and buy a one-way ticket to a country with no extradition, and then pick up the phone at the true story. And many people have from the floor have seen this airport trades where guys were just at the end of their rope, right? They were all in. They were just either gonna, this was the day and they were gonna be right, or this was the day and they were now having a new life under a different name in a foreign country.
Ooh, that is, I've never heard of that. That's wild.
So it was called the airport trade, and
Airport trade.
yeah, we saw it. I saw it so many times, and so
Yeah.
I don't know whatever causes people to snap is a very personal thing. I mean,
Yeah.
the market seemed to want to do that, right? Like they always go to stops anyway,
Hmm.
and um, so yeah, the unbreakable trader would tend to be one. And I mean, from a definition of unbreakable would mean you'd be quick to get on losers. You'd be really discerning about where you step on the roller coaster.
Yep, that's one of the places where I wanted to go right away. Yeah, so I feel like for you, when you hear unbreakable, you think about that. You think about limiting damage, right? You're not like, oh, let me take haymaker after haymaker and let me get back up. You're like, let me not get hit. Let me not
Yes,
take big punches.
making sure that you have a logical, reasonable, explainable reason for how you get from this thought of A to this trade execution of B, right? Cause and effect, A, B. Um, it cannot, you can choose to be a gunslinger, but I would suggest that longevity would be a function of having a rational, um, again, thought through a reason to make your trade, because if you have a rational thought through reason, you'll have the ability to stick with it because you're just not going to be perfect. So it's going to go against you before it goes your way.
Right.
The people who are trading, roll the dice kind of people, they don't have any staying power because there's not a rational, logical progression that has gotten them to that decision in which you're essentially saying that I'm smarter than everybody else.
Mm-hmm.
And that, as you know, is it's kind of a, you're tempting fate almost.
Mm-hmm.
It's like a successful trader is walking that tight wire. Very similar to a proper meditation where you're walking the tight wire between dullness and agitation.
Hmm.
And there's that just enough, right? It's as though you're taking just enough risk to not upset,
Yeah.
right? Just enough risk. Like, what is that? Was it too hot, too cold, or just right?
Mm-hmm.
And so,
Goldilocks risk.
yeah, Goldilocks risk, right? You want that from a place where you're still emotionally stable enough to remove yourself from the inner cheerleader of good for me or bad for me. And then you can actually be flexible. Remember, we're trying not to break. Because once you get traumatized, you saw, I mean, today, January 16th, right out of the gate, they were, straight up 30 handles and for no reason. So anybody with a particular, and then of course they finish much, lower off the highs. But if you have these sort of must be, must do, it's got to be this way, checklist about your trading, the market will eventually just take advantage of that rigidity, that break.
Rigidity.
Yeah, that rigidity. Wait, Charlie, have you ever heard the saying or the expression that one of the signs of mental illness is rigidity?
Yes.
And so, for anybody watching, I mean, I'm not suggesting that we're mental illness, but I would suggest that the flip side, positive, the non-conceptual realization of we need to be flexible. And does that mean that you practice on a physical basis, like you play Twister at night, or you go to yoga? I don't know, right? Or you go to Pilates? I don't know. Whatever it is, stretch out.
Yeah.
If you have a somatic perspective on life, then you need to embrace the physical to like get out of your head. Like some people exercise instead of drink.
Mm-hmm.
Something that would allow you to increase your flexibility might help your mental pliancy.
Pardon the brief interruption, but I just want to remind you that the final live Sang Lucci Master Course ever starts on March 25th. If you're ready to put in the work, we can make you into an unbreakable trader. You can learn more and get access to a bunch of free bonus content over at sanglucci.com/MC. And that link is in the description as well. All right, back to the video.
And
well, I had a question for you about like last year and what you did to maintain mental pliancy throughout all of last year. I mean, can you just explain a little bit kind of like what you feel like last year was like trading, just for people who are kind of, I don't know, aliens coming in who have been sort of disengaged from things. Like how was last year different? What was it like trading markets last year?
It's unrealistic to expect that the people in political power are people in the financial elite are not politically biased.
Mm-hmm.
And I think as Lewis Gab said in the most recent Gab Kelp piece, he said, I think the United States is way past the point of expecting government employees to be apolitical in regards to, I think he was referring to the Fed.
Mm-hmm.
And so in regards to last year, the understanding now that there's that politics can change prices.
Mm-hmm.
And that is something that is really hard to quantify. And I would say that last year being difficult, and I'm sure there are people who had good years because, as Taleb said in Fooled by Randomness, if someone's got a bias and the markets are aligned with that bias, they have a great year and they think, that they're a genius and they've done well, and all the power to them. The people who are looking for any sort of ebb and flow, reversion to the mean, normal distributions, normal retracements. We had long strings of either straight up or straight down. There was no. Typically, I always like to use the word professional courtesy, and I've seen this for decades and from many people, older and smarter than I am, richer, older and smarter than I am, who would say that if you sell them in the right place, they give you a chance to get out if you're wrong. Or if you sell them in the right place, say you're leading from the short side, obviously, and if you sell them in that place and you sell them in that right place, it gives you some time to determine whether or not that trade was going to work, or you could get out. In other words, there was what I would say they would give you a look if you were wrong, and you could get out. And now there is no such thing. Now it's
there's no like second chance. There's no time. Like
no, you're immediately wrong, and so it makes people gun shy to get in if you can't get out.
Mm-hmm.
Right? As soon as you're in, you're like oh great, is this an average into, or is it I'm just dead wrong?
Mm-hmm.
And because of such things, I think that the level of trauma made everybody shorten their durations.
Mm-hmm.
I would say my diminishing edge has forced me into shorter duration trades. Certainly, the advent of artificial intelligence you can see how much money is allocated to it, has changed the nature. I mean, it is a robot in a way where it used to be more human, more.
Huh. You're saying that even the algos seem stripped of almost emotional.
How's this, right? Like the machines learn, right? And so they learn that it's like a self-reinforcing thing. And the quick story in regards to 87 was when we were in the pit, it was like we knew that you knew who did what in the ring. And so these program guys, all of a sudden some guy would come in and offer 100. In this case, that would be 500 minis. And he'd offer 100, and we're like, what's this? And he's like, oh, it's just an order. And then if I execute this, they go and they buy it was just the beginnings of program trading, right? As soon as we lifted the 100 lot, whether we did it on purpose or the market just chip away and then they'd lift all of it, then that guy would go and buy the stocks, and then that would lift the index itself. And so it was like, all of a sudden we discovered this perpetual motion machine to the upside. And so it was almost counterintuitive, right? Someone would come in and offer size. And both hands up and offer size, and the ring would go for no reason at all. The ring would just go, take them, and then the guy would turn around and give the fill to the clerk, and then you just watch the cash on the board just tick straight up, and all of a sudden all the futures that you bought were in the money because in a sense, why were they selling futures? Because they were expensive relative to the underlying cash. So they could just do the arb for pennies. But in the meantime, they're just perpetuating the trend, right? The upward movement of prices is how's it marketing itself? It's marketing itself very good for buyers and people who are long, right? Price is the best marketing tool for more money to be allocated to something.
Mhm.
So in the case of in 87, the long story was we just lifted. We did that from I remember at least from June until October, where we just ran them, higher whenever we felt as though we could get someone to buy them from us higher. And then of course one day in 87, we decided the ring just sold them. Like it was a big gap down on that Monday or Tuesday, I forget. And I'd never seen a gap down so big. And the program guys were like, well, this is like free money. We'll buy this huge discount in the futures and we'll go and sell the stocks. And the specialists were already swamped. And then and it was just like, oh no. It took a minute anyway. So it just got out of hand to the downside, right? Because the guys would come in and buy and would sold, and then the specialists couldn't fill their orders,
right?
Because they were just like closing stocks left and right.
And it just snowballed.
Snowballed. And so essentially, I think the 0-day options market is very similar. The moves that I'm seeing now are very similar to 87. So in how was 2023, which was certainly the advent of people have the ability from a collective perspective. Now, instead of the ring, it's a general trading population with 0-day options, right? At 1:30 in the afternoon, if they all get together and they're like, okay, let's run them to the upside. And it's just like you buy enough lotto tickets, you can make yourself right. Have you guys ever heard that expression? There are people who trade with such size that they can make themselves right.
That's pretty wild to think about.
Isn't that wild, right? Like you just think about that, right? Like, oh, they got enough money. They can, it's like you don't want to get it.
And like manifest their own.
Yes.
Right. Yeah.
Right.
Which basically goes back to your original point about political actors and agents having undue influence on markets, right? I mean, that seemed like that played out.
Unaudited actors, and whether they're working in cahoots with the Jap, who knows, right? I don't want to be the guy with the tinfoil hat, but
right.
It is very convenient, however, that they all expire to cash, right? They don't have to actually execute, the other flip side of the trade once they get in. They just mark them to cash and then they get paid.
Right. Okay, so markets were apeshit last year. You said, obviously in terms of adjustments you made, shorter duration for timeframes for trades.
I watched Paul, who was a misfit guest, just get smoked on days, just for no reason. And so it's not particular to a particular trading style that was hit hard. I think one of the
really good experienced traders getting lit up. Yeah.
And remember what we were talking about in regards to AI and this evolution of AI, which is now the big deal. This evolution of AI means that in how AI thinks about markets, it's only measuring the present against what's most recently happened, and the weightings, of course, are in the soup of how they make that, right? Like, are you weighting the most recent past more than the distance past? Or what's your look back period? In this situation where we had the AI thing up for a while, they were looking back 30,000 half-hour periods, and the present was weighted more heavily than distant past, which seemed to make sense to me, a logical perception. And the algorithm was a forest fire algorithm from the Forest Service. In other words, markets were viral like a forest fire. And from my own personal experience, I discovered that the only way that you could beat the machine was by having things that had never happened, because the machines, if we think about it, the machines now know everything. They're like your partner who knows everything about you, right? They've seen everything and they remember it. They have a great memory. So the understanding is that when you're looking at the probabilities of a particular situation, day, stock, trade, trend, stops, whatever, you're looking at that, you really always now need to weight the probability of something that's never happened before happening more heavily, because in a sense, because it's known, by the machines, by the artificial intelligence, it's discounted. So that means that there's probably more stops where the thing that's never happened would, for something that's never happened to happen, is probably where the most stops are, and then the markets love to do that. So if you're looking from a trading perspective and you're wondering why 2023 was so difficult, I would say it was the integration of AI, the fact that every edge that has worked in the past is now known and accounted for, and therefore, like any good art, right, it disappears. So from a trading perspective, the only thing left is now to trade where there's no obvious reference points. And so if you find yourself in a situation where you have a logical reason to execute, I would suggest that you look to execute into a place of no reference points.
What do you mean by that? No reference points? Like just not key levels?
How about like the machines know fib retracements, the machines know VWAPs, the machines know 200 period moving averages, the machines know, the wide spots on the volume profile, the machines know, right? Anything that we can bring up, the machines know. But when we get to those areas, there are definitely areas in between all those known reference points where the machines won't, there will be no paper, there will be no orders there. And so if you're looking to be a seller and you're like, well, I want to sell them higher, where the the Bollinger Band is, or some standard deviation above the VWAP, or something of that nature. I'm talking about leading from the short side. And so the understanding is that you have to. That's what I'm guessing. We're all in the same boat right here. It's the beginning of January 24, and I'm recognizing that there's too much traffic and knowledge around known reference points, levels, as you say. Right? It could be double tops, could be all-time highs, right? We're close to the all-time highs. So it's almost as though we're looking for what's not there, right? Like what's not there. If there's not a reference point there, I've got a better shot of actually getting pure market action rather than one. We're at an all-time high, right? They'll run above the all-time high to get the stops, and they'll come back under the all-time high to get the people who are like, oh, high failed and it's false, and then therefore we should go short. And then it'll go back up to get those guys out, and then it'll come back down, right? And it will completely chop around just because that's where the order flow is. So you're asking, what's the change? The change is that, in my opinion, everything is more widely known, and therefore I think we have to be super creative in regards to how we approach reversion trades. The understanding, if we're trading a trend day, that things can go further than we think, because that's essentially what's never happened. Mm-hmm. How about number of days up or down in a row? Like Microsoft, for people who are watching today, Microsoft's had 6 up days in a row and 4 up gaps in a row, and it's at all-time highs. Like, that was a $20 stock. It was for years. It was a $20 stock. It was like, Microsoft, they sell software. It's not going anywhere. Go away.
Right. So, well, okay. So then we're talking a lot about the tactical and everything, and I obviously super appreciate that and super appreciate your insight into that. So what I wanted to ask you about is, you said mental pliability, which I love that. You said bend, don't break, mental flexibility. These are qualities that seem ever more important for traders to cultivate in themselves. I think a lot of that happens outside of markets. You obviously, as a tremendously successful trader yourself, but also in terms of knowing so many traders from so many different walks of life. What do you like when I ask you, the most resilient traders you've known, the people who who've always been able to just kind of adapt to the next market regime? Like, what do you think that they do? What underlies their capacity to do that, to just kind of constantly bend but not break?
You're talking about coping skills, right?
Yeah, in part.
Right. And so Everybody has different methods of coping.
Mhm.
I think that we could spin it two ways, right? We could laugh and say they drink heavily, right? They, but that's just I'm
Not
going
what
for.
we're
Yeah,
endorsing,
right,
just
right, right,
for the record.
right. The monks say there's the left hand path. They would the left hand path is people using drugs and alcohol, and the monks were saying like people were doing this years, like thousands of years ago, using drugs, alcohol, and sex for enlightenment. But in regards to what are the best traders who had the most longevity and the ability to come back really love the game to the point where it was critical. First order of, and Victor Sprandio taught me, you have to be able to come back. There are days they hand out $1,000 bills. You want to be there when they do. Okay, so that's Victor's right. We want to be there. You want to come back, and people say this, right? You always have to keep Charlie says this. Your seat at the table all the time. I remember that. And so how does that happen? Well, okay, you love your job. Okay, why do we love our job? Well, okay, the smartest people in the world do this. Okay, what does that mean? That means you better be somewhat competitive, right? You have to, it's not an ego-based thing, but the conversation from an intellectual perspective that's happening at the field of play is as sophisticated as you're ever going to find in this slice of time, accessible to us, right? Like we're not in a Nobel physics lab or anything like that. So curiosity, the understanding that we're in the club that has the smartest people. It's also, they will kill you if they get a chance. So there is no environment that's the general person who's checkboxed their way through life has no chance in this environment. It's one where you have 8 out of 10 people lose everything, right? So the understanding of like you have to have the ability to A, come back from losses, B, admit you're wrong, C, have a sense of humor, D, stay in business long enough so that you develop a sense of I can come back from this, right? Like if you're a company that goes 1 year and makes a little bit of money and walks into the bank and says, look, I need a loan to expand the business. The guy's like, we only been in business 1 year. So you don't have as much confidence to stare down an uncertain situation after 1 year in the business. But if you, like we're saying, stay in business, if you stay in business 2 years, 3 years, 4 years, and then you walk into the bank and you're like, look, I need more money. The bank's like, yeah, no problem. You have a track record, right? The idea, but not from an external reference point, but from an internal reference point for your own internal strength to stare down the face of what are we facing, right? A confusing, unknown situation at all times. So anytime that you're kind of like confused in the first year, that's really not, a feeling that produces anxiety. But as you move out 2 years, 4 years, 8 years, 10 years, 20 years, 30 years, it doesn't mean that the learning process has stopped because the markets are constantly evolving, but your ability to face the uncertainty and the anxiety associated with that under increased pressure because you've upped your size, because you've gotten better, is a skill or advice. And that is a trait that comes from people who really love the game, right? You really have to love it. Because if you don't, the people who are smarter and more, shall we say, dedicated to the game are going to take your lunch. And so, these are just things that are obvious, but need to be explained to people who are maybe just getting going in the game. And so if you're just getting going, please understand that it's a game of small steps, and it's not a game of like big breakthrough aha moments. And understand that when you make those breakthrough moments, there's no one that's going to pat you on the back, right? It's a very lonely game, actually, because the progress that you see within yourself is very difficult to communicate to people who have regular jobs, because they're never in. And people who have regular jobs, no disrespect, are never in the situation of having to admit they're wrong 8 out of 10 times a day. Every time you hit the mouse, oh fuck, I'm wrong again, and get out. And then then eventually you become discerning in regards to that entries, because you recognize that the whole process begins.
That shit you said about airplane, what would you call it? Airplane trade or
Yeah.
airport
trade? Yeah,
That's fucking crazy. That's some
true.
true,
True. True.
old school, like, God damn, that's.
I saw people who put on like hundreds of gold or crude oil contracts and then go to the airport, buy the ticket, and it was a winner. And they called their clerk and had them cover it at the close, and they came back to work.
That's fucking crazy.
Isn't that crazy? That's like,
I love that.
Fucking
Traders are so, if you're at that point where you're just like, I'm going to leave my entire life behind if this trade doesn't work, that's obviously not a position you want to be in. That's nuts.
Yeah, people
talk about all in. That's not the kind of all in that we're endorsing in this interview. Let's say that.
Fuck no. I mean, to me, but the fact that, you know, I'm young and everyone else is old and they're doing this, and I was just like, so yeah, you want to talk about
it's kind
all
of
in.
Normalized in a way.
Yeah, I mean, so the tendency to be all in has been there for a while. This is not new.
Yeah. And I mean, again, I want to kind of reframe all in. It's not I'm pushing all of my chips in from a risk perspective. It's like, I'm going to do everything. I am all in terms of my commitment to do what I need to do in order to be successful this year. You know, I'm going to take it to the next level. I'm going to go all in.
Because what is that? Is that because you're desperate? Is it, you know, who the fuck?
I think it's because last year was so hard, man. When markets are easy, people aren't all in. They're not like, you know, I gotta put in the work. They're just like, fuck it, it's easy money.
I mean, the S&P was up 23%. Now you imagine what it's going to be like if it's down 23%. I mean, it used to be that we'd get a 20% correction every couple of years.
Yeah.
And so, you know, why is it hard for traders? Because they're saying the macro, there was no reason for this thing to blister. You know, Stan Druckenmiller pissed off Janet right at the lows, saying, you know, why does she have a job? And then Janet just called Jay and said, excuse me, I've got the stock market, just get out of my way.
Right.
And we went straight up from October to all-time highs. And then it seemed on right in the beginning, January 1st, 24, you know, we had 4 down days, and I was like, okay, so Janet just needed the 23 print, or Druck apologized to her. And then, you know, of course, Jamie Dimon is out there saying things like, you know, central bankers should have some humility.
Yeah.
And so here you have, you know, really good investors being like, you know, questioning the ability of the people who are in charge of the money, the Treasury and the Fed. And so that's almost like that's more of a January 6th insurrection, right? If you were to lose faith in a dollar or whatever in the U.S. financial system, that would be anyway. So those, I guess, one part of being 23 being difficult was that the heavy-handed response from either the central banks or the Treasury Department. It was heavy-handed to the degree that it caught all of us off guard. Then the Fed came out and said, December 1st, they're like, oh no, we're going to keep them higher forever. And then 13 days later, they're like, no, we're going to pivot for no reason. There was no necessary data point. Mm-hmm. And then, so, you know, so we go from, you know, traders were like, okay, well, we have macro and we have fundamental. And then all of a sudden, like the backdoor negotiations from a political perspective with a narrative management from the people who have low approval ratings and are trying to get reelected become the driving force for the amount of monetary stimulus in the marketplace, which is unquantifiable, which leads you into a land of momentum world. And then you know, that's like when we talk about, right, like you get into a spaceship and you fly to the end of the universe and you get out at the end of the universe, what's there? And essentially that's where we are in trading, is, you know, okay, more universe, or are
Right.
we back where we started?
Well, that brings me, and that you said something beautiful that you were just like, you have to love the game. What, Brazilian traders love the game. And you could say, if you position what you just said, okay, we're at the end of the universe. A lot of people would be like, that's fucking terrifying. I don't, what's what's
Right.
next? You're staring out into the unknown. But I feel like for you and for a lot of traders who have that resiliency, they're like, this is really exciting.
You could see
what's next.
You could see the sparkle in their eye from people who love it on the floor.
Yeah.
I mean, even I get like just Dave Stone. He was a huge Comex and NYMEX gold and crude oil trader, and he had 5 kids, 5 dogs, and a wife. Never cheated, obviously. And but he'd be down $50,000, and he'd be like, he'd still love it. I was just like in awe of the love for the I don't know, is it the thrill of the chase, Charlie? What is it? Is it the unknown? Is it the fact that you're staring down courage?
That's what I was going to ask. I mean, do you feel like that's something that people can actively cultivate, like identify with the parts of the game that they love so much and reinforce that? Or is it just like, you got it or you don't? You either love this game or you don't.
Like, what's the jam, right? Are you proving your mother wrong? She said you should be a plumber and now you're a trader. Is it that, your grandfather were traders? Is it that you just are, a degenerate horse track gambler? Is it that right that you have nowhere else to go, right? Like, this is your back's to the wall, right? Yeah. And is it that you see this as the future, like the capitalistic system is the one that's survived the longest, and it's forced all these other non-capitalistic governments to actually enter the market and become players in the market? Is it a place where you measure your intelligence versus all the other smart people? Is it a place that you can? I mean, the money's nice, right? If you people are like, and then of course the lifestyle, right? And it's of course, anytime anybody gets out there and starts bragging, it's usually the death knell. But
that's usually the canary in the coal mine.
Right? They start shooting their mind, like every to anybody listening, anybody who starts talking about their trades, just look at them and say, every trade a story, and just walk away. You don't have to listen to
if they're just bragging about their
game. Just be like, like, I wasn't there, I'm sorry. Tell me what your position is, please. And then you don't have to be just anyhow. But the thrill of the chase, is very fun. Like, as they say, my brother works as a ER doctor in San Francisco, lives by the Golden Gate Bridge, and he says that he talked to the people who jumped off the bridge and lived, and he asked them, what did the guy, the people call on the phone, because you can call on the phone, and they're like suicide hotline people there on the other end of the phone, and the suicide hotline people say the only thing that they can tell the person who's about to jump off the bridge is, they ask the question, don't you want to see how it'll play out?
Don't you want to see what'll happen next?
Yeah. Like, aren't you interested in the story? And so, I mean, from a trading perspective, right, there is that motivation of, well, aren't you curious? I mean, everybody has an idea of where they think interest rates are going to go. Everybody thinks, you could just ask the person on the street, like, hey, what's your opinion of the stock market? And most people have an opinion. So there is that. It's an interesting, and it's evolved, right? It's evolved from a place where value, the formation of capital and the transfer of risk was the original definition, and now it's become a return generating machine used to control narrative for political purposes. So it's evolved. That is certainly not a level playing field, and now dominated by artificial intelligence. So I would, if you're listening and you're curious, I would suggest that it would be cost effective to listen to us who have made all the mistakes. we can spare you a few of them if you
I feel like at the core of of a lot of what you're talking about is cultivating the skill set, the capacity to choose curiosity over anxiety, right? That's something we talk about a lot in the master course and the classes that Chris and I teach on trading psychology in the master course, right? Choosing to be curious, cultivating curiosity rather than anxiety in the face of uncertainty, right? I mean, I feel like if there's one sort of calling card for Chris Cady,
how are you going to deal with anxiety? You're not going to get rid of it. Right? Where does anxiety come from? I mean, we're looking at it all day long, right? We're confused. This is essentially a confusing situation that we're part of.
Yeah.
So, I mean, I used to chew my trading cards like in the pit, and then people would chew their pen or bite their nails, or I've known some people to gun a beer. Some people would drink at lunch. But I don't recommend that.
Right. You're just saying that it's an inherently anxiety-provoking situation. So, and I think a lot of traders go out there. You're saying I think it must be liberating. I would hope it's liberating for people who are watching this who feel confused when they look at markets to hear someone with your level of expertise and background say this is an inherently confusing game, right? Because it lets people off the hook. I think people they pursue the elimination of the confusion for so long. And the truth is, yeah, of course you can learn tape reading and market profiling, and you can learn a lot of skill sets to help you understand how markets work. But at the end of the day, there's still going to be confusion. No matter how good you are, there's still an inherent level of confusion that you have to face, right? So just accept that.
I mean, not embrace it.
Embrace it, right?
Like, when you sit down in the morning, you're like, it's a discovery process, right? Like, it's like having a conversation in 3 different languages that you don't even know. It's like, you have to be prepared to try and solve the puzzle and have the mindset of that it's not necessarily going to be clean. It's going to be messy. And that there will be glimpses, though. What happens is there are glimpses of order in there, where you're like, it's almost like spiritual. You're like, holy shit, like it all makes sense for this half a second and you can trade. And then, of course,
moments of clarity, sort of.
Yeah. Thank you very much for moments of clarity. And then you go back to the idea of like, okay, we're saying that our edges have diminished in terms of duration, so that, you take what they give you and you're grateful, and then you move on, and then you wait for another cultivated discernment setup that works for however you choose to slice the onion here, so to speak. And then and then there's the understanding too that you're the way you look at things really needs to be examined from your perspective. And not from this is good or this is bad, but just understand, like, this is my perspective that may have come from cultural, or it may have come from trauma, or it may have come from social media, or it may have come from something that you just saw on the chart.
You're saying have self-awareness of the lens that you're using to see things, right?
There you go. Thank you. That's why Charlie's so good. People who are out there, you should ask. If you ever have a question, ask Charlie. He's so good. You hear that, right?
I didn't say anything. I just rephrased what you were saying. You were the one saying this. Yeah.
He just did that really well, so that you have this understanding that in my case, I lead from the short side. So I understand that. Because why do I lead from the short side? Because the market's always gone up, and every broker in the pit, when I was a local, every broker in the pit was a buyer. So you'd be like, oh, what's he doing? He's buying. So if you want to trade and you're in the ring, you have to sell them. You have to lead from the short side. So
that's beautiful. Yeah.
Right. And so, I mean, it's not because I like to lead from the short side. It's how I learned. And so, but I became aware of the fact that because I'm so much better at selling them and then buying them back than buying them. I have much more patience selling them and then waiting and then buying them back than I do buying them, because I have that experience. But implicit in that understanding for me is that I'm going to be early in selling them, generally speaking, because I have radar from that much experience of being able to lead from the short side. So I have to understand that most people are trained to buy them from the other side. So how your biases interact with the cognitive, the machines, right? Everything is those people out there who are the machine robots. They're only interested in the current mechanical process. So I think where we stand a chance is that we can have self-awareness, and we have to use that. We blend that. We integrate that into the understanding. We're both self-aware of regards to our perspective and what we're good at and our biases, as well as the ability to understand the cognitive process that's happening. And then if you get really good, then you can see you start to trade when you see the flaw in the cognitive process, like at the poker table, that's the guy who's the mark, right? You see the flaw in the logic of the other side of the trade that you're trading against. And then there you go, right? So you've got the self-awareness, so you're not jumping the gun predicated on a bias inherent in whatever reason that you have. And you're not going to beat your bias. It's just who you are. So just learn to live with it, right? And then be aware of it. And then also you have to integrate the cognitive process into your emotional process.
Yeah.
And that to me is really cool, right? Because a machine can't integrate the emotional. The machine is just cognitive. And we know that there's an emotional component to human behavior, right? Emotions create thoughts, and thoughts create actions.
And all this kind of work is what Chris and I teach in the master course. This is
what we do
in the training psychology
right?
classes. So
yeah, it's been super fun to kind of unpack it from that perspective, because it all started when I realized that we're all so good at getting out of trouble. And then I was like, well, what if we were actually more careful about getting into trouble? And then, so where does that start? Well, that starts at where you hit the mouse and make the trade. And then, well, then what's the process from which we make the decision to hit the mouse? And that's
why are we clicking the button? What's happening?
why
there's a brain signal. There's an impulse that's coming from our brain. What's happening?
Right.
Where's it coming from in our brain? Our emotions.
Right. And so then I'm like, okay, well then can we fix what's in your emotions bias? Can you fix that? And for a while we thought we could like transcend our biases, and then it was just like, no, just you are who you are. And so just be cognizant.
Self-acceptance, self-awareness. Yeah.
Do you see how good Charlie is, you people?
And then I'm just repeating what you're saying.
And then so what it leads to is actually you spend more time managing winning trades than you do getting out of trouble.
That sounds nice.
Right? Because getting out of trouble is such a waste of time and energy. You're just like, oh God, am I going to average this loser to just break even, or am I going to wait for it to come all the way back? And versus just being more discerning in regards to the process of initiation. Yeah. In a way. So 23 sucked. And so if anybody,
in summary,
anybody,
23 sucked. I think that's a beautiful place to kind of put a pin in this. I mean, we could talk. You and I could.
Let's keep going.
Geek out forever.
Think about it. Think about it. What did they do in 23? Right? They smashed the VIX. Okay. Well, if we're ants at a picnic picking up crumbs, okay, we need VIX to be high, right? Because that's when they spill the crumbs. It's like the party's getting messy, right? The VIX is higher, party gets messy. So that's where we can pick up the crumbs. So when whoever it may be, just smash the VIX. So what does that mean for 24? We can hope for a higher VIX, and with the political things on tap, probably going to get a higher VIX.
Yeah.
So that's a helpful, right? The messiness is awesome for us. Like that's so human, right? Humans are so messy. We can thrive in a messy environment. And we don't have to have the answer, right? We have to be right for like 5 minutes. And, make sure again that you have a logical sort of structural, reasonable reason for what you're doing, that you're not doing it on gut feel. That is very important. So what else is up for 24?
Let me just say, unless your gut feel is trained, is honed from many years of experience, right? Like, I
Yeah.
think that's an important distinction, because some people are like, pay attention to your instincts, your gut. Instincts are only as good as how much data you fed into them to be trained. You, Chris, if I was like, what's your instinct on this? What's your gut feel on this trade? That would probably be a pretty valuable signal. Talking to
Hey,
somebody who has been trading for 3 months, I'm sorry, your gut feel doesn't really mean anything. It hasn't been trained and honed, right? So
yeah, and what also helps, remember we were talking about what's the hook to get us out of a losing trade, and we're saying that you can't see everything in the world that's affecting price. Remember,
yeah,
we're part of this enormous system of millions, billions of interacting people acting on their own best interests. And so the understanding that I may be able to see what's happening on my screens, right here, but I can't see, what's happening in the Mideast. I can't see what's happening in China. I can't see what's happening, anywhere. And so,
yeah,
um, that's the hook to let you. That's the hook to let you out of the trade. So it's not an ego thing. It's more like I can't see everything. So I'm operating in this giant system with millions, billions of interacting parts, and I'm trying. Where's my edge? My edge is shorter duration because of that. So anyway, where were we? 2024. I would imagine at some point they go for the all-time highs, but who knows? I'm hesitant, and I would suggest that the idea of making predictions is a waste of time. You can always say, my ski friends say, ski the snow in front of you, rather than saying, oh, it's going to snow a foot. Just say, ski the snow in front of you. And I think that's a brilliant way of looking at trading. I'm just going to trade the situation in front of me, and I'll be free. It's like I'm free from predictions, right? Because if you make a prediction, then your ego's invested in it. And if you're wrong, then all of a sudden, the time that you're unwinding your pride and respect for that prediction, the market's moving the other way. And so the people who are just like on it, like the tape guys, Luch and Jay and Ranch, they're so much faster than me. It's unbelievable. I listen to them in the morning, and they're just like, "Oh, I'm going to buy 100 lot," and just because the thing starts to take up, and then they're like out by the time I've even started to think about buying them. I'm like, Jesus, they're so good like that. So their flexibility in that regard is something. Is that Charlie? I think that's a thing that young people are good at. Is like, is there the beginner's mind is like, well, I don't really know anything. If they were to approach it like that, like I don't really know anything, therefore I'm able to just hop on and hop off.
I think that's a great question. I think people who are newer have way less inherent bias and ego wrapped up in
Uh-huh.
it, and they have a better shot at sort of approaching things with a beginner's mind. Yes, for
Right.
sure.
And they've never seen
Non-attachment.
right. They've never seen giant crashes or anything.
Yeah.
Right. So there's no
But they don't know what they don't know, and
right. There's
you know,
no monster in the closet.
yeah. I mean, a lot of what we end up doing in the course is deprogramming, sort of deconditioning bad education, bad habits that people have
Uh-huh.
picked up from in other places, right? When we, in the rare case that we get somebody who's really new and they're very motivated and they come to the course, that's like best case scenario, because it's blank slate and they can learn really good habits, right off
That's
the bat.
that's how I got hired. Remember, I was a ski instructor, and they were
Yeah.
like, and I had never gone to college, and they're like, "Oh, I could show you the stack of resumes upstairs." They said but those people have checkboxed their way through life. You will just change your technique because you haven't been told this is the way to do it. I was like,
Yeah.
wow, which is
Yeah.
called transitional coping skills for those people who know me and know that story. And then, like what else would be healthy here? Or okay, so what can you do, right? You can buy strength, you can buy weakness, you can sell strength for a trade, but you can never sell weakness. Okay, so I just tweeted out today. I was like, how many people have sold weakness? And nobody out of like I have a bunch of followers now. Nobody tweeted back that they had ever done it. Nobody. So that says that in the odd chance that you start to get weakness and you sell it and it works, don't be so quick to cover, because again, you remember, the market's going to do things that it's never done before, and the ultimate hard trade now is selling weakness. And I'm not advocating to do it. I'm saying if you find yourself, like, do it like on a micro, see if you can see, you like, hey, let's try and sell weakness here and see what happens. And then if it works, be like, use that as positive reinforcement, like, hey, selling weakness is working. And then you're onto something before anybody else is. So that, from something like what to look for in 2024, look for this fact that selling weakness might work, and experiment using small size, doing that. And then if it does work, pounce. Let's see what else is going to happen in 2024. Like, it's so hard to predict anything, like the Fed, the politics, the, what was it? Dennis Quaid was on Tucker yesterday, Charlie, saying that there was going to be a geomagnetic storm and that all of our electronics were going to go down and 90% of the population is going to starve.
We got some tinfoil hat stuff.
Right?
Now we're good. Yeah, that's one, maybe don't make predictions about.
I mean, think about everybody out there. Like, think about nobody knows. And nobody knows is a great place to be.
Mm.
Right? Nobody knows.
Nobody knows. Yep. I used to work in Hollywood, and that's another.
So if you get a limit,
if you
get a limit down move, the next print will be the second limit down, because every risk manager will pull the plug on every market maker in a limit down move. Okay, so if they're starting to go to the limit, sell them, and then wait for the reopening.
Well, how about this in terms of what's in store for 2024? If someone was saying, okay, what's the one thing that I should work on outside of markets? Is it self-awareness, cultivating self-awareness, self-acceptance? Like, what would you tell somebody?
Emotional self-awareness is critical, and with that comes the incredible sense of humility, and that humility allows you to get out of trades fast. Okay, so it all dovetails together, right? Like, and however you choose it, whether it's ayahuasca, whether it's yoga, whether it's staring down the face of a big wave, whether it's arguing politics, whether it's talking in your family, your partner, have a watcher mind of just trying to become self-aware in regards to hot buttons. Like, think about if, like, Rubina Curtin, she's this lesbian feminist nun who's a dear friend of the Dalai Lama's, just moved to New York, and she's talking here, and she's like, by the time it gets to the point where you're angry, it's too late. And she's saying that the whole meditative and cognitive behavioral therapy is about the seeds of anger are what knock you off course. And how, so if you're trading angry, just stop. Unfortunately, right? Just stop.
Yeah.
And right. And if you're not, right, what's the mindset, right? We're talking choose curiosity, right? So when you're approaching the trade, just be like, am I curious to see how this trade is going to work out? Because that allows the flexibility to just roll with it. Make sure, of course, remember, we're talking about having a reasonable, logical reason for the trade, because that gives you the strength to tolerate some adverse price action against you from a structural, like I teach market profile for Charlie every now and then. And so, whether it's a reversion to the mean or whether it's a breakout situation, just understand it's not you're not winging it. You're not rolling the dice. And then with that self-awareness, it's not the answer, but I think the self-awareness is what allows you to not make stupid trades to begin with. I mean, it sounds so dull.
Which is half the
right?
battle, right?
Yeah, I mean, it sounds so dumb and dull. Like, everybody wants the answer, and I'm sitting here telling you, like, no, just like, don't fuck up the entry from being unaware of what you're doing, and you'll be successful.
Yeah.
I mean, that sounds so lame.
It doesn't sound lame. Sounds on point.
Yeah. I know, but I know everybody wants the answer, right? Everybody wants the answer. Okay. 85% of the time, use a reversion to the mean program. Okay. The other 15% of the time, when the moving averages are flat or the market's balanced, and you define it, whether the wide spot or the volume profile or wherever it's going from, right? Do not use a reversion to the mean when the markets are going vertical. But 85% of the time, the markets revert. So there is an answer. Okay. And then be flexible.
Be flexible and
Look,
don't
it can't be.
and don't drink during lunch.
Right. It can't be. It can't be as bad as it was last year. It just can't be.
Yeah, maybe it
Right?
will be. Who
I
knows? We're at
don't.
the edge of the universe. You
Right.
never
I
know.
know. I just don't think it can go. I do not believe. Here's our prediction. I will predict that it will not be as bad
Mm.
as 2023. I think the market will reassert itself over the politics. I hope.
Well, it's gonna be a wild year. So I'm looking
Yeah.
forward to navigating it with you, Chris, and with everybody in the master course. Thank you for doing this, Chris. Really appreciate it.
Anytime, Charlie. What's on our agenda in regards to what's on the master course agenda? You have Luch teaching tape.
Lucci teaching tape, of course, and options alongside Ranch.
Okay.
Jay teaching flow.
Right.
You teaching. Everybody's always weighing on trading psychology, but you and I, you with me, sort of in support. Teaching some trading psychology.
Right.
And then we're going to do some zero DTE.
Right.
And gamma focus.
Yes. Why not?
Yeah, now is the time for that course.
Why
so yeah, we're going to have some extra oomph behind that. And then we're also doing this thing. Actually, Chris, you would appreciate this. I think it's going to be really cool, which is for students who want this, who want to take advantage of this. There's going to be a weekly, I wouldn't call it support group because that is sort of a mischaracterization, but there's going to be a weekly opportunity to come in and talk to other students and have support from our team in terms of really honing in on specifically what they are focused on in improving in their trading and having accountability for that on a weekly basis. So basically, we're going to guide everybody through an exercise at the beginning of the course to write down where, and identify where you at as a trader and what are the things, like the top things that you really feel like you need to work on. And then through the weeks, anybody who's participating in this is going to be able to get support in terms of their pursuit of those goals and have accountability in terms of what they're doing to stay involved in this. And the course lasts, 6 weeks, 2 months. There's going to be a lot of these sort of check-ins, and I think it's going to be a really cool thing to help people really incrementally move forward with their goals.
Yeah, I'd be interested in helping if it doesn't devolve into my grandmother beat me kind of thing.
Yeah, we're not going to be doing. It's not group therapy. I can tell you that much. We're not doing group therapy. But yeah, we're going to have, I think some of the educators will drop in every once in a while. There's times.
I think that's really smart. I think people could use that. I mean, there is the element of always being able, especially among good traders, right? That's essentially what you're trying to do in Misfits. Was like, let's get together and after the market's closed and be like, what the fuck were you thinking? This is what I was thinking. You're like, oh, okay. Or people love to say, what they're thinking and doing. So
yeah. And this will be a chance for everybody to kind of connect and be like in a greater sense of community as you go through the course. I mean, sometimes the students always connect with one another and get to talk to one another, but this will be a chance to cultivate that even more, right? Everyone's having the same experience. So, why not connect everybody to a greater degree? So,
right. I mean, especially with a larger group, I don't think you can get into groupthink, and especially among traders, because they all are so, we all are strong enough to have the ability to say, I think.
Yeah, definitely. Traders have opinions. That's for sure. I work with all of them. So
yeah. Thank you, everybody, for tuning in. Right.
Yeah. Thank you, Chris, for doing this, man. And we will talk soon.
Okay.
Thanks, man.